Erik Peterson, Proven Realty, brokered by EXP. We've been getting a lot of questions lately about the health of the economy, financing, investing, and what the Donald Trump victory means for Williston, North Dakota here and the rest of the Bakken. So I decided to sit down with one of the smartest guys in finance that I know, Chris Jundt. Chris Jundt is the Senior Vice President and the Chief Lending Officer at First State Bank. Welcome. Thanks for sitting down with us. You and I have been doing a lot of masterminding over the last few years. We're meeting on a monthly basis. You also personally do a lot of my loans as well as my clients' loans and have done phenomenal. I've never met anybody in Williston that knows more about finance than you do, so thanks for joining me.
Yeah, thanks, Eric. Appreciate the invite.
So tell us, just for a background for everybody that doesn't know who you are and who your bank is, can you tell us a little bit about where you came from? Obviously, you're a Williston native, one of the few. What was it like growing up here, and then how did you get into banking, and then specifically why First State Bank?
Yeah, so born and raised here in Williston, moved away for a short period of time, graduated from Minot State University, just a couple hours east of Williston here, moved back in 2007, started my banking career out on the teller line in 2003. Joined the First State Bank team in May of 2011 and have been the Senior Vice President and Chief Lending Officer since October of 2012. Great organization to work for, can't speak highly enough of the Jorgensen family, family-owned community bank headquartered here in Northwest North Dakota. We've got two offices here in Williston, one in Ray, and one in Crosby, North Dakota. About 530 million asset size for our bank, and we primarily specialize in commercial and agricultural lending.
Wow, so that's your sweet spot and where you guys are really competitive. Who would be an ideal client for you guys?
Yeah, we do a lot of commercial real estate transactions, anything from oil field service companies that might be buying an industrial building to your downtown Main Street business that might be looking at opening up a retail shop. Kind of our sweet spot on loans, anywhere from a couple $100,000 to we can do deals up to $10-15 million up there. So not too many transactions that we can't handle between our bank. We also have some sister banks here in North Dakota that are under a different charter but still owned by the Jorgensen family, and work very closely with the Bank of North Dakota as well on larger syndicated participation type deals.
Fascinating. So obviously you've seen a lot in your 12, 13 years of banking, including not one but two downturns in the oil sector. How did you guys get through that?
Yeah, it definitely can be very cyclical of nature up here with the oil and gas industry. Commodity prices fluctuating pretty dramatically throughout the years, but we've always taken I would say, a conservative approach to our lending practices here at the bank because we have seen the ups and downs. So we try to make sure we're getting enough equity in up front on these deals, maybe a little bit shorter amortizations than you might see compared to a Fargo or Minneapolis market that's maybe a little bit more stable and less cyclical. So we've got a lot of talent here at our bank in particular that has worked in Northwest North Dakota, very familiar with the oil and gas industry. So have a really strong team that has background in lending in this type of environment. So I think that gives us unique insight and our ability to maybe help some of those clients through those challenging times when they do come.
Yeah, and what does your guys' default record look like, and people and companies that are having trouble paying their loans? How is that? What's the status of that today?
Right now, very clean. Things are going very well. Oil and gas industry has been pretty stable here now for a number of years. On the farming side of things, we're definitely seeing maybe some challenges brewing on the horizon with lower commodity prices out there right now for primarily your small grain and wheat type crops for the farmers that we deal with. So that's something that we're keeping a close eye on. One thing up here with our client base is a lot of those agricultural farmers and ranchers do have some nice off-farm income that helps diversify their cash flows a little bit,
Sure.
whether it be oil and gas royalties, maybe they have a gravel pit on their land, or they have a W-2 wage where they're working off the farms. So, but right now, knock on wood, things are very strong economically up here in the markets that we deal with, and hope to see that continue.
Sweet. So one of the things I always ask you in our monthly mastermind that we do right in this very room is, where do you think things are going? What does your crystal ball look like? How do you project specifically the Western North Dakota economic environment?
Yeah, I think there's tremendous opportunities up here, particularly in Williston. I would expect that we're going to see a much more certain regulatory environment for the oil and gas companies to deal with the recent change in the White House, as well as Republicans taking control of the Senate. The offside of that is, typically we do see supply increase on the oil and gas side when you have Republicans in control, and how that matches with the demand outlook. I think certainly they're going to inherit some challenges day one heading into 2025 and the inauguration based off of where inflation was and what's that has kind of done for your average everyday consumer. But we're positive on the outlook for Western North Dakota here. I think the egg side is maybe going to be a little bit weaker than we've seen in the past few years, and we're watching that closely. But all in all, I think we're going to see really good opportunity. Williston is one area in the country that if you're willing to work hard and
Right.
put your nose to the ground, that you can really go from rags to riches up here. And we've seen a lot of individuals and a lot of people start businesses up here that have done just that, and that's really exciting for us to see.
Yeah, absolutely. Tell us about when an investor comes to the market, or they want to know something about North Dakota that have never been here. What would you tell a first-time investor looking for the opportunities here? Now is one of the few bright spots economically around the country, if not the world.
Yeah, I think it's a great spot to invest, but I think anybody that's maybe new coming to the market needs to understand that there are some inherent risks that come along with investing up here with some of the volatility. If you were looking at the multifamily side as an example, vacancy rates are very low right now. Rents are rising, and that's a segment of the market that's been quite strong. But rewind that to 2020 during COVID, or further back into 2015, 2016 when we saw a downturn in the oil and gas industry. Those low vacancy rates can go to 10, 20,
Sure.
30% very quickly. So you want to be mindful of that. We always encourage our clients to take advantage when the cash flows are very strong in reducing your debt to a manageable level that if things do get tough, you've got some room to refi maybe on a longer term amortization to match your cash flows to the decreased cash flows when those tougher times come.
Yes, and I'm going to ask you specifically about some of these great programs that are here that you won't find anywhere else, i.e. the FlexPace financing. But before we get into that, when a typical client comes in, let's say they're an oil field or a Main Street type business coming in to take out a loan, what can they expect as far as what do the economics look like? How much money do they need down? What would that look like before we dive into the specific programs?
Yeah, so maybe let's break it down into kind of two segments. So we'll touch on maybe owner-occupied commercial real estate first. So that might be your oil and gas service company. They're wanting to buy a 5,000 square foot industrial space. Typically up here, whether it's our bank or other banks in town, you're going to be at that 25% down payment. So if it's $1 million building, $250,000 cash down. 15 to 20-year loan amortizations, pretty typical for us.
And what's a loan amortization for somebody watching that may not know that term?
Yeah, so that would be the number of payments that you would make throughout the life of the loan. So the payment amount on a monthly basis, based off of how much you're borrowing, what your interest rate is, and how long you're financing. That's the three factors that we utilize to calculate what your monthly principal and interest payment might be.
Great. And most people are really familiar with a 30-year fixed mortgage, right, on a house. So basically, instead of having 30 years to pay, you're going to have 15 to 20 in a commercial scenario.
Yeah, 15 to 20 in a commercial scenario. Interest rates typically going to be locked for the initial 3 or 5 year period, and then they would adjust every 3 or 5 years after that. Typical indexes, Federal Home Loan Bank of Des Moines is a pretty common one, either the 3-year advance rate or the 5-year advance rate, as well as Treasuries or Wall Street Journal Prime. Moving to non-owner occupied, so if you're wanting to maybe invest and buy an industrial building and lease it out to a prospective tenant, you could expect to have a little bit more skin in the game on that, 25 to maybe 30% depending on who the tenant is that you're leasing to. Amortization is going to be similar in that 15 to 20 year range. And then interest rates, you're going to see a little bit higher rate on the non-owner occupied investment property than you would on the owner occupied, just because there's a little more risk in that loan segment.
Typically a quarter to a half a point, just depending on how good the deal is and the credit and all the other factors?
Yep, I would say that's a pretty good average, quarter to a half point higher on investment compared to owner occupied.
Great. Are you guys looking for a specific debt coverage ratio in those investor scenarios, or what other metrics do you guys use when you're going through that loan approval?
Yeah, great question. Debt service coverage ratios, 1.25 times is generally the minimum. 125 to 140 is the sweet spot. Anything above that is very good. So for those that maybe don't know, if your payment is $1,000 per month, take the $1,000 times 1.25, and that's what the bank would be looking for in terms of the monthly cash flow that you need to generate to achieve that ratio.
And most investment properties cash flow fairly well because of our high rental rate, right? We haven't seen too many scenarios that don't pencil from an investment standpoint, and we're still seeing 9 to 12% cap rates, which is one of the highest rates as an investor can find throughout the country. The same building in California might be 4%, right? We're triple that, and I would say double most of the country average. So really good opportunities for investors. We do a lot of those types of deals, and we like to send as many of those types of investors towards you because you guys have been here, done that, and more specifically have really good terms. I know a lot of our clients have searched high and low, nationally, locally, just to try to find rates that beat you guys, and usually end up right back here.
Yeah, no, we try to, our motto at the bank is growing relationships locally, and contrary to maybe some of the larger banks out there that it's more of just a transaction, we want to develop a long-standing relationship with those clients, and when they're successful, the communities that we do business in are successful, the bank's going to be successfm.
Absolutely. So let's just get into a specific client that comes in. We have a lot of people currently looking. So let's say I'm an oil field company. I'm running a service business and I have equipment and I now want to go buy a building. What types of programs do you guys have? How does that work? Explain the SBA and other programs that are available for an owner user.
Yeah, let's touch on the SBA 504 program, because I think that program coupled with a flex pace buy down, which is a economic incentive program through the Star Fund here in Williston, it's really hard to beat that package for the customer. The advantages of the 504 program, lower down payment requirements than a traditional commercial real estate loan directly through the bank.
Would that be like 10% to 15%?
Up to as little as 10% down. Depends on how long you've been in business, if you're considered special use. So there are some specialized parameters there, but 10% is the minimum equity on that. You can get a little bit longer amortization on a SBA 504 loan. You can go up to 25 years.
Wow.
They have 3 options, a 10-year term, a 20-year term, and a 25-year term. And another nice advantage on the SBA 504 piece, that rate's going to be fixed for the term that you choose. So fixed for the full 10 years, fixed for 20, fixed for 25. Just to give people that might be watching this a flavor of where those rates are at on the SBA portion, The November debentures just sold here this week. The 10-year rate was at 6.45, 20-year was at 6.35, and the 25-year at 6.28.
Wow.
So just running through one quick example, if you had $1 million transaction, you qualify for 10% down. You need to come to the table with $100,000 down, compared to $250,000 if you were to not utilize the SBA 504 program. The bank funds 50% of the transactions, so $500,000 through the bank, $400,000 through the SBA 504. And then what you can do if the project is within Williston or kind of the 1 mile jurisdiction around Williston for the STAR Fund, is we can couple that with a flex pace buy down if you qualify through the STAR Fund. Just a real world example of one that we've did recently. They were awarded $107,000 roughly through the STAR Fund. That's matched approximately on a 2-to-1 basis through the state, through the Bank of North Dakota. So in this case, they had $107,000 through the STAR Fund, $200,000 through Bank of North Dakota, for a total buy down of about $307,000. That interest rate buy down would apply to your bank note, not the SBA 504 portion, but that $500,000 loan maybe that you took out with the bank. In this scenario, the bank note was $1,440,000. It was a 20-year term, and the rate at that time was 6.65. The FlexPace program can buy down the rate up to 5%, but no less than 5% under prime. So prime right now, after the Fed cut yesterday, is at 7.75. The FlexPace could buy that rate down up to 2.75.
For the life of the loan, or does that FlexPace based on the bucket of money run out at a certain point?
Based off of the bucket of money.
Right.
So in this case, roughly $307,000 of buy down dollars. Without the buy down in this example, their regular monthly principal and interest payment would have been about $10,947. With the buy down, that first payment's reduced down to $4,946. So
less than half.
$6,000 savings with the FlexPace buy down program on that first payment. In this example, again, it was a 240-month loan. The buy down would have lasted 54 payments. So
54 payments.
About 4.5 years. If you're a new business or somebody that's looking to expand, that certainly is a nice incentive and kind of helps people up front on that cash flow as maybe you're trying to establish and build that business up. So 504 coupled with the FlexPace is a phenomenal option for those folks that might be looking at purchasing a building to occupy and operate out of.
For owner-occupied.
Owner-occupied, yes.
And probably one of the only areas in the country where you can now put on this FlexPace financing, right? On top of it, that comes from the sales tax that the oil companies are paying. I don't know anywhere else in the country that you can find these kinds of programs that help them out.
Yep, and Williams County and Williston in particular is one of the highest users of the FlexPace program across the state. When we get the numbers from Bank of North Dakota or Keith Olson over at Economic Development, Williston is always one of the top users of that program, and really have to thank the STAR Fund board and their support of the local businesses here in Williston.
And as well as the pioneer and all of the work that Keith Olson's done, right? Sitting down with companies, helping them with all that business planning and helping them apply. That's really changed the outlook for a lot of businesses.
Yeah, and a free service over there. I mean, there's not many places that you can go and get that level of financial assistance free of charge. So definitely a great resource for the banks as well, for us to send clients over there for business planning, financial projections. Keith is very knowledgeable on the various financing programs, whether it's SBA, Opportunity Fund. I mean, the possibilities are really endless here in North Dakota, a very business-friendly state. And
most people don't know about them, so that's why we made this video and why I wanted to get you on the line so that you can unpeel all the layers, right? There's so much intricacies in this that it's good to have a guy like you running the show that understands it all. On that same note, in this exact scenario that you ran through, how much money would that have saved them in payments and interest over it versus a traditional non-504 route?
Yeah, so they for sure on the interest side, I mean, they would save $307,000 compared to if they didn't have the flex pace. The 504 rates right now, depending on whether you choose the 10, 20, or 25-year term, are running probably about a point under where you would expect to see your commercial loan rate through the bank. So call it 6.25 to 6.5. On the SBA side, you'd expect about 725 to 750 on the bank side right now.
Wow, huge difference.
Big difference.
Just in the rate. What's the downside to it? We hear a lot of our clients that say, I don't want to go the 504 because of the hassle and the paperwork and the extra time. What are the downsides to it, and how do you navigate that process for your clients?
Sure. So the 504 program is obviously a government program through the Small Business Administration. With that comes a little bit of the red tape and paperwork, but we have lending staff here that is very knowledgeable in whether it's the SBA 504 program or the 7A program, and we can certainly help assist you in getting that application completed. Little bit longer time, no doubt about it, but if you're on top of it, you're providing your documentation, you get your application completed in a timely manner, should easily be able to get you closed up in that 60 to 90 day time frame. So maybe adds 15 to 30 days to the process compared to a normal conventional commercial loan through the bank. The SBA program also does have a prepayment penalty for the first half of the term. So if you were to choose a 10-year term, there's a prepayment penalty for the first 5 years. 504 program is funded through debenture bond sales into the bond markets, so that's the reason there's some prepayment penalty to that. So prepayment penalty and paperwork and timing are probably the two biggest pushback things that I see on the program, but I think certainly the advantages with the longer term and the fixed interest rates where they're at, particularly in today's environment, are well worth exploring those options.
Absolutely. What percentage of your loans that come in and make it to get approved by committee and get funded are SBA versus not? Like, what percentage is the SBA of the total loans that you do for businesses?
For us, I would say it's probably less than 10%. So still most people are choosing to go the conventional route just because they probably want that quicker close, and it's a tight market here too. You know that very well, so it's not always possible to negotiate that longer close with the seller of the building, so that comes into play too. But definitely I think reach out if you're looking at exploring a purchase and get all of the options would be my suggestion, and then obviously once you have all the information, you can make the best decision based off of your circumstance.
Yeah, absolutely, makes sense. So we've covered the SBA side. Now speak to somebody that's an investor. Maybe they want to get a higher return. They don't want to have the volatility of the markets or crypto or any of these other investment options. Somebody comes to you and says, hey, I found a building, I'm going to lease it out to some tenants. What does that look like? Run us through that.
Yeah, so on that scenario, 25% down is going to be pretty typical. If it's, maybe a newer company that you're leasing to, somebody that's not as credit worthy as, a Continental Resources or Marathon or somebody like that, you might be in that 30% down payment depending on personal credit, your history around here, financial statement strength, but 25 is pretty typical. 15 to 20 years on the amortization. Anybody that is 20% owner in the borrowing entity, be looking for a personal guarantee from those folks. Start to finish, we can turn things around pretty quickly at this bank. One of the things that I was really drawn to when I started here is all decisions are made locally. It's right around this boardroom table. It's myself, the president of the bank, and the rest of my lending staff. We don't have 2, 3, 4, or 5 different layers of committees that have to go through the approval process. So we can generally get those ran through pretty quickly. Appraisal, title insurance, pretty typical here, just like anywhere else in the country. Appraisals do take a little bit longer here in Williston and probably western North Dakota, I would say, than maybe some other areas. So that's one thing to keep in mind. I always encourage folks to get that process started sooner rather than later. It does have to be ordered through the financial institution. They cannot go out and order it on their own in order for us to be able to use that. But we can get that process started before a loan has been approved, provided we just collect the appraisal fee from the client up front, and we can get that started sooner rather than later.
And what does that typical appraisal fee go on a business, a building, or an investment property as opposed to a house? What does that look like?
Right now, on average, I would say we're seeing appraisal fees on commercial buildings probably in that $3,000 to $4,000 range. On the residential side for a house, more in that probably $750 to $800. So more expensive on the commercial side, but they're definitely more complex. If it's an income producing property, they're going to look at the income approach on the appraisal in addition to the sales comps. So a little bit more intensive of a report on the commercial side than a residential house.
Excellent. Let's talk about investors again. For a guy that's grown up in this area who is on the lending committee, right? Tell us about where do you think our economy here is going, especially with the news that Trump won the election, the outlook of the economy. As an investor, why should they be investing here?
Sure. Long term, I think very optimistic on where things are headed. I think the markets are obviously telling the same story, with the Dow jumping close to 1,500 points the day after the election. Typically, we would be expecting tax policies that are going to be much more business friendly than had the Democrats won the White House. We also expect
from capital gains, depreciation, some of the business write-offs you're able to have, the estate tax, basically anything related to taxes.
Yes, yep, and not getting into politics. That's the facts.
Right.
I mean, we've seen 4 years of policies from 16 to 2020, and we've seen 2020 to 24, and the differences in policies. Regulatory is a big one, I think, not just for oil and gas out there, but really any business that is operating in today's environments. Regulation has just gotten out of control the last 4 years, in my mind. I think some of that will be reeled back, which I think will help to bring some of the costs down from an operating standpoint for businesses. Hopefully that will allow them to go out and expand their business, hire more people. So long term, we're optimistic. I think short term, heading into 2025, it could be a little bit rocky and rough in terms of the seas. You can't just flip a switch and undo everything that's been done the last 4 years. But long term, I think things are looking very good. Bringing that back specifically here to North Dakota, we just see tremendous opportunities, whether it be on the oil and gas side. There's very large projects that are in the works or being discussed up here, whether it's the Saralon project, whether it's some of the data centers. If any of those happen, that is going to be an economic boom here for Williston and northwest North Dakota. The state is positioned very well from a fiscal and financial standpoint. Lots of money in the bank. I think we are going to see significant property tax reform. While I was, not a proponent of Measure 4, I do think that brought forth some very good discussions and real discussions that need to happen down in Bismarck this legislative session. And Governor-elect Armstrong, I think, came out already, and I think is going to be a strong proponent of pushing for property tax reform here in the state of North Dakota, which will also, I think, be beneficial on the economic side of things here. So I think great time for people who might be looking at deploying capital, and purchasing a variety of asset classes. I mentioned multifamily earlier. That's a very strong asset class up here right now. The industrial side is also strong, as you're well aware of. There's limited inventory out there right now, rising rents. So I think it's a great time if you're sitting on the sidelines looking to deploy some cash. Williston and Northwest North Dakota is a great place to do it.
Absolutely. For all those reasons and others, right? We talked about a new grade school, as you know, approved. That was the first time in 40 years, right?
Might even been longer than that.
Longer, as far as I know, a long time. But those are the reasons why more and more families are moving in here and putting down their roots. Speak to somebody that's never been to Williston. What is life like in Williston, not only for a native, but somebody coming in that have never been here?
Yeah, so I think Williston is a very giving, down-to-earth community. It's changed considerably from when I grew up here. A lot of growth and economic development activity. If you're into outdoor enthusiasts, I mean, the fishing and hunting is world-class. You're not going to find much better throughout the lower 48 states here. We've transitioned from out-migration to, I had a lot of people that I graduated with. They moved off to Denver, they moved off to Minneapolis. Many of those people have now come back to Williston for the opportunities that exist, have started their families, so a much younger community with a lot of development and a real focus on the quality of life projects, whether it be the grade school on the education side, whether it be the hockey center that they're working on, additional sheets of ice. I mean, you just walk into the Arc and see the number of kids that are participating in like the soccer program. I mean, it's just phenomenal, the number of kids that are growing up here. And hopefully Williston will continue to evolve so it's a place that those kids, when they graduate, they don't have to move to Minneapolis. They don't have to move to Fargo. They can stay here in Williston and raise their family. And the college is doing a tremendous job up there with their medical arts facility that they're putting up, the new artificial turf projects that our bank was gracious enough to support that. Those are just all projects that I think are going to move Williston forward into making it a very well-rounded community.
And here for the long haul, as opposed to the up and down that we saw for the last decade. Similar to a Dickinson, right? Like Dickinson doesn't have the oil, but it's been a lot more stable of a market in the two drops that we've had here. Fascinating how people come here for 1 or 2 or 3 years and then never leave because they love it so much. There's something to be said about North Dakota nice, something to be said about the community here, and that nobody really has a handout, and that nobody's really trying to get into your business, right? Everybody's here focused. I shouldn't say everybody. The vibe that I felt here, and the reason I love living here, is the people and just how we can all get along, and everybody's too busy working to worry about what you have going on.
Yeah, no, that's very true, and I think that, like I said earlier, if you want to work and you're willing to work hard, there's an opportunity here for you in Williston. It doesn't necessarily have to be oil and gas space.
Yep.
So
we've always talked in our mastermind groups about the biggest challenge that we have in Williston, and that's enough housing. Not enough houses being built. It's too expensive to build here. Speak to somebody that's considering to come here that's a craftsman, and maybe in their area they've slowed down in other parts of the country as houses are sitting on the market with the high interest rates and the lower demand. If I'm a handy contractor, what would be the opportunity to come here and build?
Tremendous. Right. I mean, it doesn't matter what trade you talk about, carpentry, plumbing, electrical. There is such a shortage of trades in Williston and really across the nation for that matter. And we've seen many people come here and they started out with maybe just themselves, one-man plumbing company, and now they've got 10, 15, 20 people working for them. That opportunity exists on every corner here in Williston. Housing and labor, I think, kind of go hand in hand, probably as the biggest challenges in Williston up here, and affordability on the housing side. It's more expensive to live up here in Williston. We're kind of in the middle of nowhere from a
Right.
supply chain standpoint, so a little bit more difficult to get things here to build some of those houses. But I think hopefully they're starting to make some headway on that. It's not where we want to be at right now, but I think there's a lot of smart people that are trying to move the ball forward on that front, and I think we'll get there.
And a lot of city and county programs, and as you had mentioned, all the STAR Fund and everything else focusing on affordability and housing. So I really believe there's a lot of smart folks here. There's plenty of money, right, in these programs and through the tax revenues, and obviously some of the money that we have as well. Fascinating to see how that's all gonna get worked out, and it will, in a free economy. Speak to, you and I and your bank just collaborated last month on a succession planning workshop that we did. That was really phenomenal as well. There's a big need for businesses that don't know what they're currently worth. How do you plan what you're worth when you don't know what your actual business is worth? And then also helping advise them, guide them, and get them ready for sale and kind of a succession plan. Speak to those business owners right now who maybe their kids don't want to take over their business. Maybe they've been up and seen the ups and downs of their career and they just want to go on to the next phase of their life. Speak to those individuals that are owning businesses, and what does that look like?
Yeah, we deal with a lot of clients that have put their entire life and career into building the business that they have today for the past 30, 40 years, and a lot of them are at a situation now where they're nearing retirement, and like you said, maybe the sons, daughters don't want to take over the business. They don't have employees that want to take over the business. So how do you set up your business for an exit and a sale? And I thought that seminar was a phenomenal opportunity for clients in our area to gain some insight into maybe some strategies that they can implement now that will help them get to some of those exit strategies. A lot of them have an idea of what they think it's worth,
Sure.
but it might not be anywhere
Right.
in the range of what it's worth. So definitely partnering with you and your company on helping to assist with some of those things. We find great value in that for our clients here at the bank that are looking at that next stage in life. So definitely I would encourage anybody that might be watching this, if you are wondering what your business is worth or not sure where to start in terms of succession planning, definitely get in touch with us here, and we'll connect with them and you, and hopefully provide them some tools for their toolbox that can help them be successful as they transition that business to the next owners.
Can't wait to collaborate again. That really does it for all my questions. We could be here all day. Is there anything else that you want our viewers to check out or to know about related to finance or the economy or anything else here related to the bank?
Nothing further. Certainly if they have any questions, feel free to give us a call at the bank, 701-577-2113, and you can ask for me, and happy to sit down and visit with anybody regarding anything they might be working on and provide them some guidance and advice on loan programs that might fit what they're doing.
Well, thanks so much, Chris. Really appreciate it. Obviously, we'll see you at our monthly mastermind as well in this very room. And if you're looking to find out more about the economy and to network with some powerful business leaders that are here, reach out to me and we'll get you on that list as well. But Chris Jundt, First State Bank, Erik Peterson, Proven Realty, broker by EXP, we just want you guys to be more educated. Knowledge is power. It really helps you make better quality decisions. We live in a great place. There's lots of opportunities here. Let's collaborate and do some big things. And if you want to see more of this type of content about our community, about investing, and about real estate, make sure to hit the subscribe button as well. We'll be coming out with more and more videos all the time. And finally, if you're a business that wants to get featured on a community spotlight, please reach out to our team. We would love to highlight you as well. Thank you so much.